So we'll just go straight into Bitcoin. I think that's the most important one at the moment. So I've posted up about these three levels that for me are the areas that I'm watching and that I'm keen to see what happens. Um, we've got a reaction off this first level to begin with, which has been nice, but I don't feel like it's over yet. Um, we are count the bars here: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're into our 10th day of this swing move down. Um, it can keep going on, and you do normally get the biggest moves at the end, which is what we saw over here on this fall down to that 49k. Um, what I do like though is with this bounce, it does give us a little bit more room to potentially hold the channel. It could end up being just a sweep and up. So having this bounce does now bring this 56k level into play, um, with a little bit more probability. Um, I wouldn't say it's a convincing amount of probability, but it's definitely more than what it was. My eyes are still firmly on this level down here at around 54k, 54.5k. Um, and then you can really plead a case for a couple of different levels. Like we've got, I've got these three levels that I've put down, but you've also got the bottom of the channel. You also have filling 50% of at least 50% of this wick, which would have it at around 51.5k. We've got this candle here that has got barely any wick to the downside, so it could just be a sweep below this candle to 53k and up it goes. Um, there'd be a 786 level somewhere around that 52.5k as well. So there's a lot of different levels that people can be watching within this entire zone, but it's just sort of about going through and working out, all right, which ones am I going to be looking at? Because if you're looking at them all, you're going to be running on the spot and not making any decisions if you're looking to take a position. So for me, it's, if we lose this golden pocket here, then I feel that we're going for a new low into this zone, which it'll be shit for the short term, but for the long term, it's okay. It's still bull market territory. Starting to get below this 44.5k is when the real worry for me starts setting in. Particularly if we start getting a weekly close below here, and even 38.5k. That's the ultimate invalidation. If we start getting any closes down here, it's game over, Red Rover, basically. But we saw what happened when we wicked down to 48k. A lot of buying came in. I think it spent like 30 seconds or something ridiculous number below. It's like 2 minutes below 50k before it sprung right out. So I think that there's a lot of shit has to go wrong to get below here, but it's just being aware of it is the main thing. In the meantime, this move is coming towards its end. So I did post up in premium chats um, in here just on the weekend. Um, I'll just read it out for a sec. September is sure to bring on some fireworks. Typically a very red performing month, but could we see something a little different play out? Personally, I think there is a good chance that we do see a green September. Um, yeah, just with having the red August, we're sitting at around 58K. Sorry, 57,200, I think, for the monthly close. I think it leaves a lot more room to the upside for a green September. It doesn't mean necessarily that we're going to go pushing all time highs in September, but I definitely think that there's a strong possibility that we see a green September. Um, and we now spend, this is coming towards the end of the 6 month since making the all time high back in March. And that's coming towards the longer end of a consolidation period for a bull market. So I've written in here that I believe that we're in for some green weeks. Monday and potentially into Tuesday, I think we'll be setting the bottom side of the monthly wick before we start turning up again. Now, because we had the US holiday on the Monday, I think that could actually run into Wednesday. We go. I'd like to extend that out to Wednesday now. It could just finish up on Tuesday, but yeah, just with the holiday, it sort of puts things on pause again. It's a bit like weekend trading. You'll see a pump on the Saturday, a retrace on the Sunday, and it ends up exactly where the CME price closed up on the Friday night. It's much of a muchness here when you have the public holiday that lines up with a weekend. So yeah, I'll go on to say that we're in our ninth day down. Anything over 7 days down is getting a bit long, and that goes for on the shorter time frames as well, like on the 4 hour chart. If you're getting up over that, up over seven bars in a direction, it does start to get a bit long in the tooth. The shorter time frames you need to be a bit more flexible with. It's not very much there's no hard and fast rule about it, but I have seen some swings go, like 14 candles in a row, but before a lower high or a higher low gets produced. So it's just something to be aware of when you're seeing a lot of candles. Okay, we're starting to get to the end of this move. We're going to have a bounce. It may just be a temporary relief bounce that produces a lower high or a higher low. But we're going to have a bounce coming up nonetheless. And further, we have the stock lining up across the 12-hour, daily, and weekly. See the charts. So I'll just pull this up. So we're looking at the daily here. We can see that the stock and the RSI are right down there, at 1.68 and 5.27. They're getting ready to cross. They haven't crossed yet, although that may be changing at the moment. So we'll have to have a look. I'll post up some fresh charts once we get off the call. 12-hour is bottoming, like it's just sort of flatlining down there. It's waiting for a move. And the weekly is crossed already. The weekly is just waiting for that push up, basically. So weekly is ready to go. The 12-hour is ready to go, and the daily is just starting to turn. So that's pretty much where it sits. But if we go back and look at where we got the 48,900 low, we can see that the stock RSI was already at the bottom, and then it sort of held down. So this indicator isn't to say, right, as soon as it gets to the bottom, it's going to cross, we're going to go up. It's to say that it's coming towards the end of its move. And from that to that 48,900 low, we had 1, 2, 3, 4, 6, 8 candles to the downside. And we're starting to approach similar to, we're past that territory now with our move to the downside. So it can hang down there a little bit longer, but I think the greener pastures are coming. The fact that we've got the weekly is turning up, ready to go. We can see where we've had the bullish crosses previously. There's been at least two green weeks. Sometimes there's more, sometimes there's 3. We have had the most recent cross of us 3 weeks to the upside, and then if we go back to like where we crossed down at 38k, well, we had a heap of weeks to the upside. So there definitely is some promising signs heading into September. Whether it just chills out down below and waits maybe to October, I think it's too far away. Just where these indicators are sort of sitting at. Yeah, that's right, Hunter. October, November. I think a lot of it would also be priced in as well. Um, I think that the biggest thing is probably when you have Kamala and Donald sitting on a stage making a new policy announcement. They're probably the biggest. They probably draw in the most volatility in the moment. Um, but for the most part, things are looking pretty good. Like, we're going to the Japan carry trades back here less than a month ago, and it's recovered over 10%. Oh, it's recovered about 10% um, from that massive sell off. So I think things are looking pretty good. And then we've had this little consolidation, a little pullback, and currently sitting, what is it, within 1% of another all time high. So I think the markets are looking pretty good to be honest from that perspective. You know, just zooming out, it's had a crazy run from these lows back in 2 years ago. Geez, wow, that was 2 years ago now. Crazy run from 2 years ago. Absolutely mental. I wonder how much percentage gain that is. We're currently sitting 62% up in just under 2 years, which is crazy. Crazy for stock markets. It's it's starting to look a bit similar to the COVID crash pump that we got. What did we get here? 120%. Mental. There was a lot of money injected into the economies for that run though, but we haven't seen like massive runs like that in a long time. Like COVID crash, not COVID crash, GFC crash. For the last time we saw some massive super quick gains like that. You know, bottomed out at 673 and did a 2x in basically a year from when it bottomed. But no, I think for me, stocks are looking great. Nasdaq's probably chilling out a little bit more. It's it's a little bit further off its high, but it's also had a larger run up. What was I think S&P was around 60 something percent. Nasdaq's has run up 100% basically. So it's a bit more volatile, the old Nasdaq, but once it does push through, it'll take off again. I think, at least anyway. I don't think we're in any sort of danger in the short term of seeing a recession or a crash. And it's interesting, 2025 years that end in five are typically extremely good performers um, for stocks as well. Geez, Dow Jones, it's closed at a new all time high. So everything's just ripping. Um, let's do a little bit of history check. Well, that wasn't a good year in 2015. Well, I suppose it did have a sell off and then it recovered. '85, '95. I don't know. I don't have any qualms. I don't think when it comes to the stock markets, I don't think. Yeah, US stock market. Yeah, the interesting one for me is just watching how the Dixie plays out. Um, I've been saying for since I started this that the Dixie is going to tank, and forex takes a lot longer to play out, and I think we're seeing it happen now. Hasn't unravelled yet. We've still got this low here at 99.6 hold on to, but it is extremely close to sort of tipping off. It's broken down from this channel. It's broken down below this low. It did find some support and has had a little bit of a rally, but this is on the weekly chart. It's had 1, 2, 3, 4, 5, 6, 7, 8 weeks to the downside. So to see a bit of a bounce is not untoward at all. I think even it could come up a little bit higher to that 102 level before it sort of continues on its little warpath down. And if we get, I wonder how far back this chart goes. Go to a monthly look, I think. So this is leading into the peak of the last land cycle. So it's 2005 and it was on 92 there, and then it capitulated down. This is the US dollar down to about 70, and that marked that's around the GFC period over here, and that's sort of where we're sort of in this. I think we're around this 2006, maybe even a little bit further, 2007 mark potentially. We're around here somewhere. If we were to compare this to today, I know the chart looks different. Like, I had this massive rally up and then a massive sell off. Where this decent rally up and then a sell off, and then it's just had this chop sideways more or less for the last 18 months or so. But I think the rundown's coming. Is it going to be as volatile as what it was back here? Hard to say. It really is hard to say. I'm not too. I don't really follow forex that uh, that full on. I just want to know what's happening in it, because the weaker the dollar gets, an inverse reaction is that risk on assets will appreciate and get more value coming into them, or get more dollars coming into them rather. But 30%, 25% drop from there, take it down to around 75, 80, something like that. It could fall anywhere down here, and that would be huge. I remember back in this period over here around this 2006, 2007, the Aussie dollar was on parity with the US dollar, and everyone over here in Australia was flying over to the US and living it up, loving life. Lately, I think we've been trading at around 65 cents on average. You guys might have seen me talk a little bit, or not talk. I'll put in a comment in the sweat chat about holding US dollars. If I was a US citizen, yeah, no worries. I'd hold US dollars on chain, staking it, or whatever it may be, because that's my natural currency anyway. I'm not necessarily going to be putting myself at a disadvantage if I need that money when and if the US dollar tanks. because that's what I use every day. Whereas for myself in Australia, if I was to hodl in US dollars into the US dollar crashing, and I've put my money in at 65 cents to the dollar, and then US dollar tanks, and all of a sudden the Aussie dollar's back at parity again, like what happened in 2006, 2007. I've just eroded, nearly 40% of my, well, 45%, roughly 50% of my purchasing power with my money based on that crash, which is pretty damn serious. It's a fair whack to be in forex and to be losing that sort of coin. Now that's talking peak to trough almost, but that's when the emotion set in, and that's typically when people buy and sell at the wrong times. Is that peak emotion, which is at typically the bottoms and the tops. So, Hunter, I know it's not a problem for you, mate, but for us other, yeah, that's right, that's right. Well, that Aussie dollar's been kicking off now. I know no one else in the world really cares about the Aussie dollar, but it was trading down at 62, 63 cents a little while ago. So it's doing all right. The euro's broken out, which the euro is very similar chart to the Dixie, given it's the most, it contributes the most information to the Dixie. Getting above that 50% level, which it's been trying to break above for a little while now, but it has broken to the upside of the channel, and in a decent way as well. Slightly increasing volume. Although if you're looking at the trending volume is down. But this is on a monthly chart. This is back in 2022. So I think times are changing, not changing. The cycle is playing out as it typically does. This euro gaining strength in the euro is not unexpected, and I think it's going to continue going north as well. It could get up to $1.25 even, and get a bit of a double top going on. Now this is talking over the next 18 months, 2 years type of thing. We could get it coming up, double top, and then we get a capitulation. And throughout, 27, 28, 29, something like that, we start seeing the euro dollar tanking again. And on a macro chart, it may be in a downtrend. It may come and take these lows and be putting in a lower low over multi years. But if you're looking to take a trade now to take advantage of in 5 years' time on forex, I don't know. You got a pretty boring life, I think. I hope nobody does it, because I don't want to offend anyone. But you wouldn't see me hanging out waiting for this double top to then take a position to ride it down to here on forex over multi years. I might just have a quick look at Sweat, because I did post up a little bit about Sweat. I think it was last week. Time frame do we want? 4 hours. Alrighty. So I think it was when we were in this move over here, I'd posted about it. And I think I was saying that 0.0085 is probably my number 2 key level. It's extremely important. The reason why, we can go back, if you guys don't recall. To begin with, when we tried this rally back here in July, we failed to close and hold above. But that's not really why it is that important. Maybe on the daily, it's easier to get back over there. Okay, so we got this lovely bounce off it here. October last year, that was on its way up to its making its new highs. Basically was a springboard up to 1.5 cents, more or less. And then it was providing this underside support when it got rejected before it ran up to hit, I think it hit 2 cents, didn't it? Almost 2 cents. So for me, 0085 is an extremely important level. Back here was providing support. Then it got flipped to resistance, and then support. So, and on this breakdown, it was the support before it eventually capitulated through. So this is why 0.0085. I haven't been trying to search how to get a fib to line up with it or anything like that. I just know that, for me at least, that's a very important level. It did reject, and I said if it does reject and doesn't get through, which I didn't think it was going to get through on the first attempt, we're heading back down to 0.0072, which got pretty close, 0.0073. There's still time for this to play out. If we get Bitcoin on a retrace now, it's going to be probably coming down even lower, to be honest. I'd like to see it hold these lows, but it could sweep these lows. That's fine. Let's get our little pen out. Came down and if it could come down, sweep these two lows, bounce off the most important horizontal in my mind, which is 0.0063, and V-shaped recovery back up. I think we're talking hypotheticals here, but that would be a pretty good move. There'll be a lot of, not that there's a lot of futures traded on sweat, but whatever futures are traded on sweat, people that have been taking long positions throughout the past sort of 5 days or so are going to see this and think, oh, double bottom. There's a lot of support here. And there's going to be a lot of stops piled in below here. So to come down and sweep it, take that liquidity before it sort of goes up again, I think that's a pretty high possibility to see. We have seen strength come into sweat, which has been definitely welcomed. And I think if we go back to last year and think about what happened, we saw the bottom come in June, and then from June, sweat really took off through to October, through until the US launch, and that was probably its sort of golden period. I know it hit its all-time high, or not all-time high, its cycle high after the fact, but in relation to how sweat was performing in relation to the rest of the market and Bitcoin, that was the golden period for sweat, was through until that sort of mid-October section. So to see sweat sort of holding itself together and showing a bit of strength now is not unusual. We can see it on the sweat BTC chart as well. So this sweat BTC chart actually looks really good. Popping up, consolidating, popping up, consolidating, converting the old tops into support before it springs back up. So something similar is going to happen here as well. It's just when you zoom out, we really want to get above this level here at 1,500 satoshis. Just to go back to what I was saying, how the golden period was through to October. So this is the low in June. The low against Bitcoin came a couple of weeks after the USDT low came in. And then we've got the US launch at the top of this week here, around, the second week of October. And that is what I refer to as the golden period for sweat, where it was just outperforming Bitcoin, outperforming the market, doing really well. So, hopefully we can get something similar this time, and it continues on higher than what it continues on higher and continues on longer than what it did last time. I think that there's potential for it to move up in an uptrend for longer than what it did last time, just with how the market's going, Bitcoin dominance is right up there, and it's still going up. I know, but we're at the pointy end of the deal. Um, hopefully soon we start seeing that change in trend. I think worst case scenario we'll have to wait till Q4. So, but Q4 is not far away. We're a month away from getting into Q4 now. So, but I think with that I might call it there for today, guys. Sorry, I'm keeping it a little bit shorter today, but we're going to have the public session tomorrow, so I need to save my voice a little bit so I can get through that one as well. But thanks for jumping on, Hunter. Yeah, I'm about to go to work, my friend, but it's all good. I'll try to take it easy. I might catch you tomorrow, mate. And take it easy, Belgium. Good to see you, mate.